Good afternoon, everyone. This is Cash Rocket from Twitter. Just wanted to make a quick video showing you which stocks I'm looking at for this upcoming trading week based on options activity, good-looking charts, and other assorted criteria. If any of the following technical indicators that I'm going to show you don't make a lot of sense, just hit me up on the platform and ask me what they are. For example, these vertical red and green lines, the green and red bars poking out from the sides here, the green dots, the red dots, etc., etc. So I'm going to just start off with my little watch list here I call plays. I've got exactly 20 of them actually, and I'm just going to show them to you in alphabetical order what I'm looking at for this week. One of them, Ascendia Pharma. Stock is on the verge of breaking out here. The chart looks kind of choppy, not much to look at, but the hedge funds are in this big time, and there was some unusual call buying in this week of the March 95s, which is way up there. So keeping an eye on this one. Don't know if I'll play it, but watching it anyway. Bank of America, Coil, looks fantastic, looks ready to break out along with the rest of the financials. XLF saw a big bullish risk reversal as well on Friday, I believe it was. I try to keep track of some of the bullish call buying down the left-hand side here, and I think this one's just a matter of when, not if. So just need to set the price trigger on that one above 30 bucks and good to go. Continental Resources looking ready to break above a bit of a inverse head and shoulders neckline here. Um, there's a price by volume gap up here ahead. Actually, if I click on the 6-month view, you can see how there's this sort of gap in trading volume between about 59 and 53. So if it breaks above this red dot here, which is called the vol stop sell dot, that would feed me a buy signal, and my target would be up to the 200 MA and then eventually into that gap using something like the June or the April calls that were purchased a little while ago. Devon Energy, similar kind of setup, similar kind of sector, has a nice big price by volume gap. Popped on a nice earnings and is now flagging above the 8-day moving average. There's been some massive accumulation of the July 34 calls a couple times last week, and then also the week before that in the form of a July call spread. That one you could actually take it now. You could wait for it to break above its earnings high of the day, and then once again you're playing for a move into the gap. ePay, this one was brought to my attention from Smart Money Action on Twitter. There is a gap once again to play for, so as you can tell, I like playing for the gaps. As well, there was some call buying a couple of times last month. Hedge funds have been adding to it, and honestly, when they bought the March 50s there on February the 8th, which was around here, I thought 50 bucks, give me a break, and then I went straight to the target. So I don't see why this can't hit 55 bucks by April, which aligns very nicely with the 200-day moving average. Eaton Corporation has seen some accumulation of both put sales and call buys. Once again, if I click on the 6-month view, you can see there's what's a 6-month price by volume vacuum, also called a Kirby. I can explain that one another time, but long-time followers know exactly what I'm referring to. Nevertheless, it's riding higher among its 8-day moving average. There's been some nice volume accumulation patterns I can see here down on the left bottom panel, I should say. So any further sweepers or other action comes into that name, I probably get involved over 81.50. Exelixis, again, moving along a rising trend line. This one is a biotech stock, so please size accordingly since it would be higher risk on that alone. The biggest position in open interest, the August 18 calls, and those are from a trader who's been rolling from February and before that rolling from November, and they've been making money the whole way through. Price targets on the street quite a bit above where we are now. Hedge funds are in the name. There's been some volume accumulation on the big days. So really just a matter of deciding to take the plunge and go for it, I guess. I already have a few bio names right now, so kind of just waiting to sell a couple of those before I take on a fresh one. Hess Corporation, love, love, love the look of this one. Sold off hardcore in December like the rest of the market, and then not only made all its way back, but is actually looking poised to move above the 200 for the first time in, well, since fall of 2018 and make its retest run back to the highs of 72 and change. There's been some leap call buying in this one, which I really like to see, whether it's June or January, so there's no pressure to get involved right now. But it's making a series of higher highs and higher lows, and honestly, once it can get for me above this purple line here, which defines resistance back from November, I would definitely be looking to take a position, and potentially a rather large one at that. ICPT, tricky name to trade, had that Nash data, popped up big, sold off a couple weeks ago, and is now looking to make a run again to the top of its trading range, which has been in effect since about the summer of last year. The analysts on the street are very bullish about it. There was some call buying just on Friday, as a matter of fact. And honestly, I think the risk reward on this is favorable. If you run a fairly tight stop, for example, below the low of Friday or below the low of Thursday, and see if we can make it back up towards the 115 to 125 range, that's good risk reward, and that's all you can really ask for, right? Lam Research, I just talked about this on Twitter last night. Lots of call action, great technicals, great fundamentals. It's got some overhead supply here, 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 and here, but that still wouldn't stop me from taking this trade once I get my buy signal, which in this case is when it sort of clears that 178, 179 area right around there. Momo, I've traded this I think once in the past. Don't remember how it worked out. This one can be a little dicey, just like any of the other technology names and China names and Momo names, ironically named. Nice rounded bottom after it gapped down on a weak earnings, has more than recovered it and is now flagging above its 8-day moving average. There was some big accumulation on Friday of the April 35 calls. So again, if it pops above the high there of 35 at 60 and call it, you can make a trade here for a quick move to the 200 MA. And if you're going to be more aggressive than that, even shoot for a gap fill. And when I say gap, I'm talking about this one here, this volume by price gap that goes all the way back 1 year. So between 39 and 43, it should fill it fairly quickly if it gets there. Qualcomm, I think I'm going to be making this my next big position, breaking out of a falling wedge, earnings gap above, which I love to shoot for, reacted poorly on a weak earnings report, and then has quickly moved higher from there, filled the gap, and broken above its 50-day declining EMA, which has served as resistance for multiple months now. It has incessant call buying. In fact, on Friday alone, looking at something like 36,000 calls purchased between October and July. So I think this one is just a matter of me just getting involved. Not sure how or when I'm going to do it. Probably by the end of the week, though. Charles Schwab, unbelievable looking financial here. It had some leap call buying on Friday, both in the 50s and 55s. Easy target to shoot for, which in this point, first reference would be about the $49 point, and then you'd be looking next at around, call it 54, 55, which would be sort of the last swing high back from July of 2018. So yeah, literally a break over 47 bucks and giddy up. I can also see here, I imagine this was probably a positive earnings report. I would have to verify that. I don't have it at the moment, but I can see that there was a pop on volume in January and is consolidating very nicely before its next move higher. Smith & Nephew, unusual call action, has responded well to its last 3 earnings report and looking for it to move above that little red dot here again for a quick move to 40, 41. Rumored that this stock might be an acquirer of another medical devices company such as Wright Medical or possibly NuVasive. I have no commentary on that other than to say that when I see risk reversals like this put on, and then some tack-on call buying often signals that there might be a good little trade in there. Tandem Diabetes, I won't say much more other than to say please review my chart and tweets from yesterday. Hedge funds are in it, great technicals, great fundamentals, some good option flow. Buy the dip in this one in any event, with a trailing stop, of course. But yeah, it looks beautiful, looks ready to run to 70, 80, 100 over time. Why not? Diabetes is in a bull market of its own. Union Pacific, some call action in this one. It can be a little bit tricky just because, if the market has a bad day, this one tends to get really slammed. That being said, there's a gap below, so I know that doesn't have much to do with it at this point, but if it were to sell off, that is where I'd be looking for a form of support. But more importantly, the stock is forming a flag here, not as pretty a flag as maybe as I would like, but if it starts to firm up again and can break over, call it 170 or so, I would be looking for a move to approximately 180 or at least 175. And again, when this one moves, it can move really quickly. So I'm not sure if I'll take it or not, but just wanted to at least draw it to your attention. Vulcan Materials played this one I had a little earnings trade on for that one, which was pretty sweet. Once again, actions coming back to the name earlier this week, saw an April bull risk reversal, popped on a nice earnings report, is now just sort of quietly consolidating and flagging around its 8-day moving average. And if I can see a move above about 115, 116, I'm happy to get involved in this one for a move right back up to the highs around 125, 130. Although you would have to be a bit patient with that one, since it's not exactly what I'd call a big mover or a big high beta name or something like that. Vertex Pharmaceuticals, the target of some highly unusual out-of-the-money call buying recently. It has an inverted front-month skew, which does imply that there was a rush to buy, or I shouldn't say a rush, but increased vol on the call side. So you're looking for traders potentially worried about a quick move to the upside. Sorry, I didn't explain that very well, but I think many of you people on the stream know exactly what I mean by inverted skew. Hedge funds are moving in and out of this name, but the ones who added, arguably maybe not as significant to me as the ones that exited, for example, OrbiMed, but the price target on the street is a lot higher from where we are. I wouldn't risk a lot more money than you're willing to lose on this one just as a speculative trade. I do know I did play this one a few years back where it popped something like 30, 40 points, and I managed to snag that one with just one lucky call. If you decide to take it again, just a spec position, but I think greater than 50-50 odds this one makes a massive move higher in the next couple of weeks based on its upcoming data readout on one of its triple therapy regimens. World Wrestling Entertainment brought to my attention by a couple of people on Twitter recently, although I've never really not kept an eye on it over time. Really nice consolidation pattern here. Let me just turn that into a mini channel. It has some prior call interest. Somebody bought the July 70s back from November for about a few $100,000, and they're actually still there, sitting there waiting patiently. It has a small float and a high short interest, the combo of which can be quite deadly, so that when the stock triggers, there's not a lot to buy, and there's a lot of people that need to cover. So you could see a really fast move to 95, 100. But as I mentioned just a bit earlier, since there was a sweep of some leaps quite far out of the money a couple of weeks back, that might indicate that the reward on this one is much, much higher than the risk you'd be taking by getting involved. If you're worried about where you'd stop out, just use this 200-day moving average. You can see it worked out a couple times in the past. And if it loses 75, 80, then just get out. Finally, we come to Zendesk, Momo name, powerful name in the software sector. Hedge funds are big buyers of it. There's some buyers in it in July and even out to October calling for a move as high as $115. So the stock is trying to move higher here. I'm personally probably not going to take this trade anytime soon, but if the market sells off and we get a move back to this sort of the mid 70s area around there, that would definitely attract my attention. So that's about it for now. Those are my top 20 plays for next week. Take it or leave it. Interested in hearing your feedback, or if you have any comments on the video, please do so on Twitter or either on my YouTube channel. And look forward to a great trading week with everyone. Have a great day.